Yes, thank you, Marvelous, for the introduction, and thank you, Witstart, for having me. Like Marvelous rightly said, my name is Abigail Kazeem, and by profession, I am an investment research analyst. So, a background into what I currently do would be to provide, in simple terms, let's say, provide information to investors, provide relevant information and timely right information to people, which helps them make the right investment choices. Right. So that's what I do. Um, and I'm glad to be here. Right. Aside LinkedIn and CV stuff that I do, but basically I am an investment research analyst and I'm excited to be here. So today we'll be talking about the ABC of financial management, particularly for student entrepreneurs. I am grateful for this topic, right? Because I see a number of like Akelamide rightly said, right? He made a video, right, and explained how entrepreneurs, right, whether you're a student or not, let's just use the word SMEs, right? Small and medium enterprises. The way we've seen the way these people or these small businesses, right, manage their finances is usually not encouraging. You see that, and most times, right, especially for small businesses in Nigeria, we need a lot of intentional effort to thrive. And when I say thrive, I'm talking about thrive for 2 years or 3 years, thrive for a very long time. In finance, when we are talking about long term, we're talking 5 years, right? So the minimum not to exist for as a business should be like 5 years. But that's not us. Our business should exist for a very long time. In accounting, it's something we call um going concern, right? So when a business is established or a business is created, it's expected, or we always assume in every of our accounting entries that the business would exist forever, like forever and ever. So all the accounting entries that we do will be based on will be on going concern basis. So that's the mindset that I want us to have, right? Not that you're doing a business for 2 years, 3 years, or so. Also, as we go ahead in this webinar, or let me call it a class, because it might look short, but what I'll be saying, I have a slide, right, as you can see. What I'll be saying or teaching is much more than the slide. So it will do a lot of good to listen and most likely jot, right? Even if I will share the slides. What I will say would do much good, right, than compared to what I have in the slide. Right. I'll also say that as we go along in this class, we also drop highlights on the chats in the chat box, right? So that so I'll know that you are with me, right? Like Marvelous said, to keep everywhere properly organized, you have to ensure that everyone stay muted, but you can drop your highlights or the key points that you get in the chat box as we go along. Now let's get right into it. I'll feel free to also drop your questions as we go along. So I'll be taking you through the art of bookkeeping, cash flow management. This outline seems simple, but like I said, stay with me. No, like I said earlier, small businesses, particularly in Nigeria, you need to put in a whole lot of work to ensure that things actually go the way you want them to go. Right. According to World Bank analysis, national NBS in Nigeria, right? National Bureau of Statistics and some academic surveys that found I saw that um 48%, right? SMEs contribute to 48% of Nigerian GDP. GDP is gross domestic product, sorry. And however, out of that huge number that we have, right, over 80% of these businesses still fail within the first 5 years, right? And this is usually due to poor financial management. If you remember what I said at the beginning of while I was doing the brief introduction, you would remember that I mentioned in finance, right? The your long term, Abi, short term, when people say short term or long term, it should start from 5 years. So the minimum you should be looking at is 5 years. So if a business cannot sustain itself, or a business cannot what's the word now? A business cannot, you cannot stay afloat, you cannot do well within 5 years, then there's nothing you're doing. If you want to test how good or how bad the business is, just give it 5 years. If it fails in less than 5 years, then it's very bad. If it survives the fifth year and makes it to the sixth year, then there's probability that there's over 50% chances that that business will continue to thrive for 5 more years, right? So 5 years is the benchmark. Even when we're trying to prepare financial model for businesses, we use 5 years, right? We do 5 year forecast, all of those things. So if a business can fail within the first 5 years, then something is fundamentally wrong. And most likely, most times it's always wrong with the financial management, because there's a lot of things that are embedded in finance. A whole lot of things are embedded in finance. Um um finance is much more. Of course, it has to do with money, but it's much more than just having money and keeping money. You would get to understand as we go along. So the art of bookkeeping. If this was a personal finance class, right? I've had two personal finance classes this year, right? And one thing that I keep saying is to invest in yourself. If this was a personal finance class, I would have started with that. But this is a financial management class for entrepreneurs, particularly student entrepreneurs. One thing you must ensure to do, right, in place of is the process of, or the act of bookkeeping. And the first on the list would be to have a designated business account. You cannot tell me, sorry, you cannot tell me that you have a pastries business, or let me see, I'm trying to remember. Give me examples of businesses now in the chat box, please. I'm trying to remember businesses that students would typically do, say food business or design, graphic design business, or say um so that type of thrifts. Yes, thank you very much, Purpose. Thrifts, yeah, are selling clothes and all of those things. You shouldn't, in no circumstance, right, in no circumstance should you mix or merge your personal money, right, with the money that is going out or coming in to your business. Okay, listen. Now, tech has made, and these small banks, right? Sorry, when I mean small banks, I mean OPay, PalmPay, MoneyPoint, Kuda. They made it easy, very extremely easy. Most business owners that you see now, you see that they have MoneyPoint accounts and all of those things. You can easily create any of these accounts, with an account, a bank account, with any of this business, any of these apps. You with your business team. Usually something like Blueprint by Abigail Kazeem, something like that, right? Or Witstart by Akelamidi, or something like that. Just ensure that you have a designated business account, right? Have a designated business account separate from your personal finance, separate from that of your personal money. Ensure that the money, every money that is coming into that particular account is for your business. Every money that is going out is as a result of your business, right? Also, practice regular tracking of your income and expenses, right? Regularly track your income and expenses. Let's use the example Precious gave us. Let's say you are doing you're into thrift businesses, right? You went to, let's say, um pipeline, I don't know, in Lorry, and um you want to buy some clothes, right, that you have to resell, right? Your transportation, document it, your transportation, the cost of that clothes, the everything that you have to put in between, all your expenses. And when you eventually sell your income, how many did you sell? At what price did you sell one? Put everything, document everything. At no point should you be caught off guard with your income and your expenses. As a business owner, you should know your numbers, and there's no way you can know your numbers if you're not keeping regular record of these things. Know your numbers. Everyone here, I want you to, maybe after this class, but like I said, get your pen and paper. So I expect that everyone here is taking notes, right? Aside screenshots, this slides will be made available, so you don't have to make screenshots. So there's everyone here should go and look for Shark Tank on YouTube. Somebody can type it to make it clear. Shark as in normal shark. Shark Tank, Tank, on YouTube. So for easy access, just do Shark Tank Global, right? So you can get access to the global view where Shark Tank by different various nations of the world. You would see how entrepreneurs will come. Typically, what the show is about is entrepreneurs coming to pitch their businesses to potential investors, telling them that this is how much my business is worth. This is how much revenue. Revenue is how much I've made, like revenue. This is how much revenue, this is how much sales. Let me be simple. This is how much I've made over 3 years. Because they will ask you, this is how much I've made over how much have you made over 3 years? Tell us. How much cost did you put into this business? How much of your personal money, how much equities into this business, how much debt is into this business, how much do you have to borrow, right, to keep this business at this level that it is? What's the profit you have made over 3 years? They will ask you. And as an entrepreneur, if, as I said, everybody should go and watch Shark Tank to spoil you to know your numbers and take your financial management of your business very seriously. So as a business owner, it's very, very important to know your numbers. Extremely important. You cannot do it. And there's no way you can know your numbers if you're not keeping track of it. There is no small amount in business. As a business, if you want to sow a seed for the Christians here, or you want to give somebody, if you have a portion of your business, you record it, no matter how small. If you bought water for yourself on your way to on your way to meet your supplier or your vendor, record it as well. There's no small amount, and you can do this through manually by using paper and barrel. Sorry, you can typically, right, use a spreadsheet. As we go along, I'll show you an example of something when we get along, of a screenshot that I did of a spreadsheet. I'll also share the Excel sheets for anybody that wants to, for easy editing, right? Please remind me if I forget. Also, you can do this using a spreadsheet like Microsoft's Excel or Google Sheets, any of these, or WPS, any of those tools that have spreadsheets. You can also use apps, right? Life is now easy. The image you're seeing on this particular slide is from Money Manager app. Personally, I use Money Manager app from personal finance, and Money Manager will help you to easily integrate your personal and business finance, like to easily separate it yet integrate it. So can use Money Manager app as well. There's also Sparkle. I will not be surprised. This might be a business idea for Witstart. Witstart might also have an app, right? So you can just use, but before Witstart does that, you can do Sparkle, use Sparkle Flex. You can check out any of these apps, right? On check them out. Just do a simple Google search or download them to explore, right? They offer very, very good budgeting and expense tracking method that would definitely help you. Right. The last thing on about the art of bookkeeping is be aware of of the financial stand of your business. I think I laid emphasis on that when I was talking about regular tracking of your income and expenses. Be aware. Never should It should not happen that as a business owner somebody asks you how much have you made, or how much did you make this month, or what was your profit in August, and you're doing okay, so this plus this. No, it should never happen, because somebody can be interested. I had got a text from a business owner, right, sometime um 2 months ago or thereabout, and she was telling me that she wants to do a proposal because somebody is interested in investing in a business. Person was asking critical questions that you should have given the person on the spot, right? Who knows whether if she has answered that question on the spot, potential investor wouldn't have been a potential investor. Like he would have made the decision on the spot to invest in a business. But you could not answer a simple question like, what's your revenue? What has your revenue been? What was your revenue last month? What's the cost? What was your cost last month? How much, what was your starting amount? How much did you invest into this business from beginning? You cannot answer those questions. You should not do that. And it's never too late. If you have not done that, you can start from now. It is never too late to start. It is never too late to right a wrong. Never too late. And this relates to everything in life. It is never too late, right? To catch up. Okay. um that's bookkeeping. This particular thing, I'll keep making reference to it as we go along in the class, right? I'm not saying the chat buzzing, no. Okay. So the next thing, and another critical thing for a business, right, is cash flow management. For under the art of bookkeeping, when you separate your personal money or your personal finance from your business finance, and then you learn how to what was the second thing I said now? I learn how to keep track of your expenses and your income, and you're able to your numbers on the spot, your profit per month and all of those things. Profit is um let's say gross profit, for instance, revenue minus expenses. Let's make it simple, right? Revenue minus expenses, total amount you got in your business minus total amount you have spent, right? Let's say sales minus costs. That's the profit that you have. However, most times, in most cases, your profits as a business does not equate the cash flow at the moment. Okay, hold on, I will explain. In business, right, cash flow is king. I know you must have heard the word cash is king, but in business, and as it pertains to this class, let's use we're going to stick to cash flow is king, because let's say you are into, particularly for people, it cuts across whether you're offering a service or you're selling a goods, right? But this is usually peculiar, like 100% of the time, to people who sells goods, and usually 80% people who offer services, because you cannot a business will not survive um on audio money. Profits can be audio money. Let me explain. Let's say let's use someone that sells pastries. Yes, I have a cash flow statement in the next slide that we will explain very well. But still, hold on a bit. Let's say for Abby Pastries, for instance. Yes, I want to own a pastries business sometime in the future. Nearest future. So let's say Abby's Pastries, for instance, and then we have a we sold, do the math. So in the chart, let's say we sold 100 we sold 100 banana bread, right? Let's say we sold 100 banana bread, which is what, 100,000, for instance, 100,000 naira worth of banana bread, right? And out of those 100,000 worth of banana bread, most of the customers, they've not paid, but because we have sold it in accounting, there's something called accrual concept, that those people have not given you the money does not mean you have not made the money. Oh, do you get what I'm saying? The fact that they've not given you the money does not mean you have not made the money. You have made the money, oh. So you put it under your sales that you have made 100,000 naira, but it does not come into your account. You don't have it in form of cash, right? You don't have the money in your hand, but you have sold it. It will be delivered very soon. Especially for people that do what's it called, payment on delivery. That seems very risky, but let's just put it like that. Let's say for people that do payment on delivery, you have sold 100,000, you have sold banana bread worth of 100,000 naira, but the money is not yet in your account. It will, and then the cost, the amount that total amount that cost you to make that banana bread is about, let's say, for instance, now let's say 50,000 naira. Let's say the cost. No, let's not say 50,000, so we will not be confused. Let's say 70,000 naira is the cost, right? So you sold 100,000. The sales revenue 100,000, cost 70,000. Your profit will now be worth 30,000. Your profit is supposed to be 30,000, but in your cash you don't have anything. You've not gotten any money. You've not paid back any vendor, anything. In your books, it will be showing that you have 30,000 naira profits, but in your bank account is zero naira. There's nothing there. How will you, if your vendors come to your doorstep to say, Abby, where is my money? You have not paid me for the flour. You have not paid me for the sugar. You have not paid me for the butter that you bought. You will not be able to pay the person now because you've not collected any money. You have profits, audio money, but you don't have cash. So cash flow is king in business. You have to ensure that at every point in time you can account, and that you can account for every cash flow, every cash that is flowing in and out of your business, right? And I'll explain further as we go along. So there are three major cash flow levels in finance, but I'll make it very simple. As a matter of fact, the statement I attached to this slide, to the next slide, is not the conventional. If there's any accounting student here, you will know that the statement I attached to the next slide is not the regular one. complex. I don't want to make anything complex. I want to ensure that you get practical tips from this session. You get as much practical tips from this session as possible. All right. So in finance, you'd let's divide cash flow in your business into three levels: operating cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Like the word says, operating activities, right? Cash flow from operating activities should be the money that you have spent. Here on my slide, I said the amount cash that you have generated or that you have spent on the core business operation. That is Abby's pastries. They sell banana bread, they sell normal bread, they sell coconut bread, chocolate bread, meat pie, every kind of pastries that you can think about, or flour materials, or food items. So you know that any money that comes in or goes out, we paid our supplier. We got money from our we paid our vendors. Sorry, we got money. The money that our customers paid us. Everything that relates to what we do as a business, you put it under cash flow from operating activity. Cash flow from investing activity, however, is what you have, the amount you are paying or the amount you are generating from investing in your business. Say for as Abby's pastry, for instance, I bought a mini oven because I'm starting small. I'm using my house, for instance. I bought a mini oven. That mini oven is an investment into the business because it's going to generate cash flow for me. That's what I'm going to be using to be making my banana bread and everything. So I would put it under cash outflow, like the money is going out, outflow, money is going out, inflow, the money is coming in to your business, right? This is very, very important. That's why I even have a graphical representation to it in the next slide. So you need to pay very, very close attention. Right. So anything that relates to you investing in your business, let's say as a designer, you bought a software somewhere, you bought space in the clouds, you bought anything that has a long-term effect on your business, right? That has a long-term effect on your business and it's capable of giving back to your business should be under investing activity, right? And then cash flow from financing activity. How is your business what's it called? How is your business being financed, right? From time to time, are you using your personal money? Like in finance, there's something we call equity, right? um is a method of investing into the business. Let me not use the word investing. Financing a business, right? That's different from investing activity. Financing a business, right? If you are putting your own money into the business, you are an investor in your business. You put it under equity, which is cash flow from investment. Or you just saw somebody just come and say, I'm going to borrow you, or you approach somebody for a loan, right? A 200 million naira loan, right? So that loan that they've given you, put it on that cash flow from financing activity. Anything when you're paying a cash flow statement for your business, it has to be the money you have received, like real cash, not audio money, real cash into your business, or real cash flowing out of your business, flowing in and that has already come in and that or that's already gone out. That's to be real, not something that somebody promised you. All right. So you have to ensure that it is not audio money. This is not so clear, but I should send the Excel version. But I hope that we can see it very clearly, or maybe a bit. Right. So you see this graphical presentation. It's a cash flow statement. And as a business, aside, you remember when I was talking about what's it called? The act of bookkeeping. I mentioned record keeping. You are aware of your expenses and your income. That record keeping, if you're using physical paper, divide it into income and expenses. Your sales and your expense, but that is different from cash flow. You need to the importance of monitoring your cash flow, right? Your cash inflows and outflows as a business is for you to also know, because part of knowing your numbers is also knowing the cash at hand, the cash that you have at the end of the period. Because it's from the cash that you have at the end of the period, you know whether you have enough money to invest in yourself or to put back into the business. It's different from the profits you are making as a business. Like I said earlier, your cash flow is different from your profits. Your cash flow is different from your profits, right? And I gave an example, I gave an illustration earlier, right? So always ensure that you prepare. You also do your cash flow statement. This is for a month, but as a small business, right? If you have large sales, like you have large volume. Like in a day, you can make five sales, especially when you are selling things, right? And you have daily sales. I would advise that you do it weekly instead of waiting to the end of the month. But if you offer services, you can do monthly, right? I mean, you can afford to to do monthly, but day in day out, write a record of your cash activities separate from the traditional bookkeeping that I said earlier, because knowing the amount of cash you have now for your business is very very important and is very cool, and you get to know. And now buttress that as you go along in the class, right? So let's say cash flow, let's say you're trying to prepare, Abby Pastries is trying to prepare a cash flow statement for August 2024. For cash flow from operating activities, like I said earlier, to be cash flow I've received for the month of August to we sold so amount, that much amount. We collected cash, we received cash from our customers of this amount, right? And we also paid our vendors that amount of money. Net cash flow from operating activity be the difference between the two amounts, right? You see the math. I did a graphical representation or a visual representation so you can further understand what I'm talking about, right? Investing activity is the same thing. You bought an oven, you bought a software, you bought a laptop, right? To further enhance your business. You bought a mic if a YouTuber or podcaster or something. You bought a new phone if that's part of if you're a content creator or something that enhances or adds more value to your business, right? And cash flow from investing activity does not just have to be an outflow, right? It can also be the old oven that I was using before as the CEO of Abby's Page, the old oven that we were using before is no more good again. So we sold it. We sold it at scrap to somebody. I probably bought it when I bought it 100K. But now I now sold it. I sold it at 50K because I've used it for 5 years. I tried to sell it at 50K. That 50K profit that I'm getting from the person, I'm putting it on that cash flow from investing activity. Yes, an investing activity, because at the end of the day, I have to add something to it to buy a new oven or put the cash in another part of the business. The reason why, another reason, a core reason why you're paying a cash flow statement for your business is to know where your money goes per time. Because there's always this dilemma for both businesses and both for when you're dealing with personal finance. Most times you get a credit alert, let's say $20,000, and you're like, oh my god, I have money in this sustainable economy, I have this much money, and then you did the math, convert it times 1,600, you see that you have so much amount of naira. But then you pay your rent, you pay school fees, you take care of your personal care, you do your hair, you buy all of those things. Before you know it, the money is in amber, like it remains small to be red. So you have to be into, and then you're wondering where has this money gone to. And the same thing usually happens for business owners as well. A customer pays you a big money when that gig was going to click. You're very excited. If this client can pay this money, I'm going to have enough money to sustain this business for 2 more months, for 5 more days, for 20 years. And then the customer pays you and you can't find the money again. Like you just use the money to do different things, different this you even use money to might even pertain to the business, but you might not be able to pinpoint it, right? Especially when it comes to investing things. When you find yourself buying, let's say you're a photographer, you bought a camera, you bought a new lens, you bought what's all those things to buy? I can't remember. And you bought all those things. You might not want to put it under expenses. Account for it in your cash flow statement. This is very, very core. You have so that you have a vivid understanding or a vivid picture of where your money goes per time. If you have a bulk of your money going to investments or bulk of your money going to operating activities or a bulk of money going to financing activities, it will also help you to checkmate yourself. You want to say, oh, am I not spending too much of money on operating activities? Our cost is too much. As a business that is into pastries, we're spending too much on flour, we're spending too much on butter, we're spending too much on our raw materials. You want to reduce it and say, this month I want to spend more on investing, or I want more finance. I need we have little financing as a business. We need to go and get more investors. It will help you to also know where to go and what to target as a business. So it's very, very important to know your numbers, to keep a record of your numbers at every point in time, right? So this is very critical, right? While I was wearing this slide, um took particular note of ensuring that this is included, because it is easy to say, okay, I've not even typically for both personal finance. Okay, let me start from the personal finance angle. So, because at the end of the day, business is run by an individual, and most times the way we run our personal finance, the way we run our individual money, it's usually most times have an impact or effect on how you run your business. Sometimes the effect is not immediate because you're like, ah, this is my business, so I don't play with my business. I use my business money, my business money. But if you spend your personal money now, at the end of the day, that's like a that's attitude that you have in your personal finance would somehow slip into your business unconsciously, because that's what you do with your money, right? Except you have an accountant or somebody that manages it and that can stand ground, and whatever CEO says, I'm not giving you this money, right? Except that, but you're a business owner, small business owner, you want to be hiring an accountant. Where's the money, right? So you most times in personal finance, we always say reduce your transportation, reduce your feeding, be prudent, cut costs in different ways, cut costs, save. We most times we preach. You hear more of people preaching cut costs, save a lot. Just reduce it, make the most of what you have. But usually, is better or is easier. Right, it's easier to increase your earnings, to increase your sources of income than to be prudent, or to just than to what's it called than to soak yourself and deprive yourself of some good things of life, quote unquote. The same thing applies to business, right? It's very good to cut cost. I mean, if you decides to, there are two ways, right, to increase your profit as a business. Is that you cut your cost or you increase your revenue. Because at the end of the day, profit is what? Revenue minus cost. So if you decide to reduce your costs, it will still be good, right? You reduce your cost by, let's say, like Precious told us earlier, you're into thrift business. Instead of taking bike to a particular place, you trek so that it can reduce your costs, right? Or instead of this particular vendor, you scout for another vendor, or instead of using a particular tool software, you look for a cheaper one. Instead of this using this particular data provider, use another data provider, so you can reduce your service costs. All of those things, looking for ways to reduce your costs, operational efficiency and all of those things. And if I people working for you, right? Reducing the salary might not work in this economy, but um shrinking the number of people that work for you, only retaining core staff and all of those things, right? They might work, right? They will actually work when it comes to reducing costs, but they are not the best bets for a business. You can watch it if your cost is overboard, like your cost is just everywhere. You can actually reducing your cost might work for you, but ultimately the what usually work for a business is to find ways to increase your revenue, core ways to increase your revenue, right? If you are providing services, look for a way. Of course, if you're providing services, to increase your revenue, you have to increase your price. And to increase the price that you charge your clients, or the price, as I say, as someone that sells, the price that you charge for whatever you sell, you have to increase the value that you provide. I mean, you can't be giving me, okay, let me not use the example that's coming to my head. It's the name of a business. You can't be giving me bread and stew in the name of pizza and see expect me to pay the same amount. I will look for another vendor that will give me a better pizza or better something else that tastes exactly like pizza or that tastes great, right? If you want more customers to come to you, if you want volume, like larger customers, right? Increase the quality of what you sell to me. If you are selling thrift, give me good thrift, right? Give me good thrift. Have you have to um provide value added services, or provide value added goods. Do more, do much more, and you can also increase your price. But most people, a rational human, as everybody, I'm sure you will agree with me, if somebody is selling something to you and it's the same way, although in this current economy they increase the bus fare. It's not as if the buses that we're entering now have AC. But where you were paying 500 naira for before, it's now 1,000 naira. That's a different case because they're not just increasing the price because they want to increase the price or because they want to increase their revenue. It's because they want to match up with the increase in cost. So that's a different ballgame entirely, right? I'm saying all other things being equal, you want to increase your profits. A good way to go is usually not will not be. I'll not advise always looking at your costs. Look first at increasing your revenue, right? Then when you have succeeded in that, when you are finding a way at that, then now also look at your costs, right, and see how to be more efficient with your cost saving approach. However, when it comes to increasing your revenue as a business owner, your mindset at every point in time should be long term, right? I saw a post on LinkedIn one time by is it Yinka Ditbury now? Yinka Ditbury is a renowned investment banker also. Um, and he said something. I wasn't the one. I don't think it was the one. I think it was another person who works in PwC. I can't remember. I'm mixing it up, right? And he said something very critical, which is very true. I found it to be true, which is that business owners tend to want to eat their seeds. I'll explain. You just started a business, like your business is 1 month, 2 months, let's even say 5 months, and you're thriving, you're doing so well. Let's say cooking business, because almost everybody is now doing cooking business. You're doing because cooking business will always sell somehow. Let's say you're doing cooking business, you're cooking spaghetti in the evening or something like that, or in school you're cooking noodles, you're just doing something, right? You have a business and you're running it. You the small profits that is coming in, yes, is able to sustain you. You're able to support yourself. You're not calling your families at home for money. You're not asking anybody for additional help. I mean, yeah, the business is able to sustain itself. Instead of investing back into the business and finding ways to expand the business, finding ways to make the business self-sufficient, there's something about long-term thinking. Most business owners, most small business owners, most SMEs would eat their seeds by you at year one. Your business is making how much? You're already paying yourself a larger part of the profit. I mean, maybe let's say the business is making a profit, let's say, and cash flow of about, let's say, 1 million or something. You, as a student, that might look, it depends on the level of student, that might look quite huge. And then you want to pay yourself a huge amount of money. Even if you want to pay yourself as a small business owner, you want to ensure that the amount you're paying yourself, because as a small business owner, I'm not sure that if there's any business owner here that okay, let me just see what I'm saying. As a small business owner, right, your income most likely will not be the same like regular month in, month out, or even week in, week out. If you sell something, right, it will not be the same. The amount you sell this week will not be the same amount you sell next week. So if you want to pay yourself, which is amazing, I mean, you're working for it. If you want to pay yourself, have a this is the highest amount I'll pay myself. Like you've checked your that's also a way of that's also an advantage of keeping track of you and knowing your numbers. So you know your numbers, know that in from January to June, the average, you added all the profits together, January to June, and divide it by 6. That's usually how you do average. So January to June is 6 months. Add everything that you have made together, divide it by 6 to get an average amount, accounting wise. So that average safe, you might even minus 10K from it or minus one small amount from it. Just to make sure that your business does not suffer because you're trying to pay yourself. If at all you want to pay yourself in the early stages of your business, in the first 3 years of your business, if you want to pay yourself, if you must, use the average amount minus a buffer, maybe minus 10K or minus something. But however, be very realistic in that. I just want to mention that to say that think long term in your business. The fact that you're making so much now does not mean your business does not have the capacity to make much more than that. So the first thing I would say when it comes to thinking long term as a business owner, be to upskill. All these things that we're saying is very sweet, right? When the previous I spoke about increasing your revenue. There's not so much a business can do, right? A business cannot grow beyond how the business owner has grown. A business cannot grow beyond how much the business owner has grown. A business cannot grow beyond how much the business owner has grown. As a business owner, if your level of intelligence, your level of growth consciousness, your level of intentionality, your level of skilling is 50%, your business cannot go beyond that, right? Because you are the one in control. You are the most business owners, you are the accountant, you are the security person, you are the logistics person, you are the delivery man, you are the everything. Your business cannot grow beyond the level of knowledge that you have. If you don't know beyond what you have right now, you have to upskill. You have to there's a book I read or reading actually. No Excuse by Ben Tracy in chapter 5 or 6. It talk about no chapter 3. It talk about what's it called now? The 3%, the 3% rule. Even as a salary earner, let's say you also earn a salary alongside, or you, as an income, the fact that you're earning an income right now, or the money that is coming out of your business, 3% rule says you put back that 3%, invest it in yourself. 3% of your earnings is 0.03. 0.03 times the amount the profit you have made. Invest it back into your business. Maybe not investing like buy oven as a pastry person, or buy learn a course, take a skill, go for a paid seminar, do something, invest in yourself, put it back into your because thank you, Joy. A business cannot grow beyond how the business owner has grown. Like say that to yourself or stare at that sentence a lot of time for it to make a lot of sense to you, right? Because it's kind of deeper than it sounds. All right, and it's more serious than it sounds actually. So upskill, invest in yourself, and also invest in people. Investing in people is very, very critical, especially or particularly when you have people working with you. Let's take Witstart as an example. When Marvelous was doing the introduction, she said she introduced her colleague, she welcomed Summer or honored, right? If I may use that word as well. She honored, I can't remember. Yes, of course. She honored the CEO, right? Akinola Mide, and some other amazing members of the team, right? If you also have that number of people, if you also have people working with you like that, you have a driver, you have a cook, you have people, you have people working with you, you have someone that will, you have a delivery man and everything. Invest in them. If your delivery man doesn't know how to use Google Map, one day he will lost whatever it is that you're telling him to go and deliver. If you cannot teach your, what's it called now, your community manager, or what do they call, like, and you don't call it community manager now, people that respond. I was trying to purchase a shoe yesterday, and the owner itself said, the I want to buy white. She said the white is not available, we have silver, and I don't want silver, I want white. So she said okay. So I said, and the amount payment has been made. So I told her that, please, can you get me another design that is also white, but within the same budget? And so she said, oh, my sales team will reach out to you, right? If she has not invested in that sales team to teach them the etiquettes of business, how to communicate with a customer, because when the sales team eventually reached out to me, I knew that it was a sales team because the name was saved with the business name. Person was very courteous. Person picked up from where the CEO left the conversation. So it was not so different. I didn't feel like I was talking to another person. It seemed like I was still talking to the CEO. And that shows, and I've not met this salesperson in real life before. I've only met the CEO. However, chatting with the CEO, the salesperson rather, felt like I could see that the CEO, right, has invested so much in our sales team because they have the same ethics. Like, okay, so how about this one? Do you want this particular soul? It was so seamless, very simple. Within how many minutes we already done with our conversation. So it's very important to invest in people, particularly if you have people working with you, right? Or you this another angle, or you intend to have people working with you, right? This is me merging point four and point two together. If you intend to have people working with you, right, you have to also invest in structures and processes. Invest in structure and processes. So if you let me take myself as an example, perfect example here. as something that I also do. I will not call it side also. There's nothing like that. I don't believe in. Okay, let me not go for that. But there's something I also do. It's not small scale. Something I also do full flesh. Right. What's it called? CV optimization and LinkedIn optimization. CV writing and LinkedIn optimization, right? I do that. But as time goes on, I've been doing that since 2021 in small scale, teaching people, helping people to build their profile, telling them what to do. At the point at the beginning, I was doing it for free. But as time goes on, I begin to charge this little amount, and as time goes on, I increase the amount a little as I also increase my skills. You see, I increase my knowledge, took courses, took courses, went for events, paid events, went for seminars, met people, network with people, knew much more about it, right? And sometimes even now, do some accounts for free to learn some things about it, explore LinkedIn Premium, like all of those things. But as months, as days begin to turn into weeks and into months, I saw or notice that there is need for me to, and then my career as an investment research analyst or as a finance person is also growing by the side, saying that there is need and also have personal growth, right? Remember that I can't do much if I have not done much myself. Okay, that's also another way to put, a business cannot grow beyond how business owner has grown, so I cannot really do so much of all these things if I am not growing myself, right? So now I'm seeing the need to have more people work with me. I'm seeing the need to put structures and processes in place, which is why I have a mentorship program coming up. Right, registration is ongoing. Yes, coming up in October, starting October 8th. I want to teach as many persons as possible, and as many persons that are willing, not as possible, and people that are willing to dedicate the time and effort, because it takes a lot of work. It will take a lot of work to learn. I want to teach, like pour myself into people, teach them. That's investing in people and also investing in structures and processes. I'm trying to explain, right? Teach them how to the A to Z, how I do it, how to do CVs, how to do LinkedIn, what to look out for, the pointers, the secret things that most people don't even think about. But when I do it for them, it's yield tremendous results, right? Teaching people that, and then from those people, picking out the very serious ones. Of course, people are going to pay for it, but not everybody that will pay for it to take it. The seriousness not be on the same level. I don't think I said this that I'm saying right now in any public space. I'm saying um right now I'm even saying the real reason why that course is put in place. And out of those people that are going to be registering for the course, pick still like 5, 10 people that are very serious. 10 is even a lot. A few people that are very serious at the end of the course and go further mile. Most likely at no extra cost. No extra cost from them. Go extra mile in building them, in grooming them to make sure that they can do what I do at the same rate and at the same level that I do it, and much more, right? And then building my structure and process around those people, right? So much that my LinkedIn and my CV business or part of me is growing through those people, right? They are doing it as I do it. I can delegate effectively. I can give them a client CV or give them a client LinkedIn, and they will do it the same way Abigail would have done it, right? That's me investing in structures and investing in processes. So you should also look into that as your business grows, as your service that you provide grows. You don't necessarily, you won't actually have to be everywhere. You can't be everywhere as your business grows. If you really want your business to grow the way it should grow, you can't be everywhere. You have to invest in structures, you have to invest in processes, structures that work, right? You have to do things in the way that things to be able to run smoothly without you, right? The way the person I wanted to buy shoe from did. A sales team handles it from beginning to the end, and I didn't even have to go back to that. Sorry to ask any further questions. The third thing, which is related to the fourth and the second, as a matter of fact, related to everything, is business expansion, right? Ensure that your business bears fruit. I mean, I've even said that, right? What I was mentioning point four. Ensure that your business is big. Don't let what you're doing stop with you. And I see that Witstart is actually doing that. Don't let it stop with you. You have people, right? We start as a community manager. As I'm sorry, I mentioned community manager alone. That's the only position and the CEO zone that I can remember. But we start as people or team members that are working here. So bear fruit, harvest, grow into um invest in business expansion, right? Very soon. I don't know if we already have that. We start most likely have students from Unilearning, students from OU, students from Unilag, students from Harvard, students from Oxford, students from different parts of the world, right? That's the importance of growing, expanding your business and being fit. And you can do that. That will work more when you have invested in people or as you invest in structures and processes. Because you can have your business almost any way. You just need a vendor or somebody that is there to represent you. Once I've invested in somebody that is in another state or in another country, it just grows. It grows. It grows. It bears its fruits on its own. But none of this will happen if you misplace or you take if if you misplace or you belittle the first point, which is investing in yourself, right? Which is investing in yourself or upskilling. And that is very, very, very important. Like I said earlier, I think I can take questions at this point. I've been speaking for a long time now. Give me a minute. Yes. I think I can take questions now. Yes, I was going to say something. Let me not forget. I was going to say something under this point of be aware of financial stand of investing in yourself, right? Being knowledgeable. There's something about what's it called? It's something about a business, right? There's something about being aware of the trends, knowing exactly how your business is doing per time, knowing what is acceptable in the industry, right, per time. Another thing is, I hope that everybody is aware of the fact that um it's very, of course, it's very good. That's why we're all here now. Akiolamide, Witstart is also about what's it called? Witstart is also um about registering your business, right? Business registration. So you want to be sure that your business is registered, right? So that when that time comes, which is, I'll say the same thing I always say to LinkedIn optimization, profile optimization, right? Or customizing your name. So you ensure that you register your business, right? Register your business. But there's also another one, right, where you register or have your company incorporated, where you register yourself as a company. It's a huge difference. And this is also part of where knowledge comes in. If there's any way, anything that you don't understand when it comes to business or anything in respect to your business, always ask questions. Ask people who have gone ahead of you. Ask questions from people, because if you choose to incorporate your business, sorry, I'm moving around my slide. If you choose to incorporate your business um and not register it as a business, you want to be sure that you are ready to carry the you're ready to carry the responsibility, right, that an incorporated company will carry, right? If you are registering your business, like you're incorporating it, you're registering it as a company, right? Want to make sure that the FRS will come for you. That's Federal Inland Revenue Service in Nigeria. They will come for you at a particular point because they have a wide range of resources and they know companies that are incorporated, right? They can trace you. They have the information. So you want to be sure that before you move to that level of growth in your business, you can actually handle it, right? Even for business is safe. There's a level of tax that is expected of you, but you might still be able to dodge that. I hope there's no tax official here, but for companies, incorporating your companies, I just thought to put that out. You want to be sure, although there are some allowances that are made in your first when you first in your first era or in the first years of your business, but you have to ensure that you are aware of all those tax laws, you're aware of the regulations, you are informed about what is happening in the society when it comes to your business, right? So I believe. Now we can take questions now, right? I did not see any question in the chat as we as the class um as the way about the class. So do we have questions? Or over to you, Marvelous. Let me not
Okay, thank you so much, Ma. Thank you, Miss Abigail. Wow, this is you've just dished out a lot right here. Sincerely speaking, I enjoyed your class personally, and from what you said so far, I think I'm fired up to even learn more and develop myself better because you said something that our business cannot grow if we ourselves don't grow. And so I also took point another point 3% of your income. Well, these are things that we practical steps, that we can take in investing ourselves so that our business can grow. Thank you so much, Miss Abigail. Aside from what I've said, there are other things, but I don't want to go over it again. So let me just go straight to the questions I have here. And okay, so one of the questions I have here is, yeah, what are some effective ways to manage cash flow in my business, especially during slow periods? Ma, did you get that?
yes, yes, you said what are can you come again, please?
Okay, I said, what are
Yes.
some effective ways to manage cash flow in my business, especially during slow periods?
Okay, so that means that sounds like um how do you increase sales? Not really how to manage cash flow, or what's the context of that question? Because what it sounds right to me is how can I? Because the person is saying especially during slow periods, meaning say when there are no sales or when there are no yeah when goods are not moving as they should. Is that what you mean?
Yes, ma.
Okay. So typically, especially if you're into selling of goods, right? If there are slow periods, right, and you're looking into how to enhance or increase sales for your business, a typical way will always be, I would have said this might be a slow approach, like taking a step backward to review what it is, right, that your customers would want you to do. Already taking a bulk of time, right, to talk about investing in yourself and investing in people, but you can also aside also talk about the effect of giving added value, right, to your business. Let's say you can also do combo sales, right? Say now I do CV and LinkedIn, and I see that there's somebody that wants to do what's it called CV, and in slow periods. I've not had so much services in the week. And I see that there's someone that wants to do CV, and I'm telling her that in addition to this, do you know that you can also do your LinkedIn profile? It would be great that you also do this, right? I'm giving the person double combo. I'm offering the person combo services. Usually when I do that, I reduce the price by some certain percentage, and I let them know that this comes because you're doing this combined thing. Another thing that you can do as a business owner, if you just think not everybody will be offering two services or selling two things that they can combine, right? Another thing that you can do is to leverage on the power of collaboration, right? Network. So you're doing, I'm sure that whatever you're selling, I don't think there's anything anybody's selling or any service you're offering that you cannot collaborate with someone, right? I mean, maybe somebody, a vendor that sells the raw material that you use. Let's say of Abby's pastries, for instance, you sell banana bread. You can collaborate with your flour seller or something. For people that come to buy, if you know anybody that is interested in banana bread, I can sell it to them, I can deliver it to them. Usually when vendors, let's say for people to have take somebody that does what's it called, all these event planners for instance, they always know very good caterers, very good decorators, very good fashion designers, very good. So most times those people work hand in hand, and the same applies for almost all businesses. There's no business that you cannot see that you cannot see what's it called, an opportunity for collaboration. So look out for opportunities for collaboration. That also helps. It's you cannot operate in isolation as a business. So look out for opportunities to work hand in hand with even not even with particularly with your competitors, because you don't need to know what is going on in the industry. You can't be, for instance, if you don't know, you'll be charging a price. You might even be charging a price that's lower than the industry average. You might do that when you're just starting your business, but your business cannot sustain itself when you continue to do that. So you have to be aware of how much everybody's charging. You have to be in sync with your competitors, be friends with them, don't fight with your competitors. Know what they are doing. Know somebody else. Know a lot of people that are doing the similar thing that you do. There's growth really in healthy rivalry. So that should help really.
Thank
Marvelous.
you, Ma. Thank you, Ma, for that answer. Thank you so much. Yeah, so we have one question in the chat box. Okay, from Coyote. It says, what are ways to source for capital or fund for a business? Like the ways we can source for capital for our business. How do we get to fund our business?
Oh, that's an interesting question, right? Especially for a small business, right? In this webinar, the context was for student entrepreneurs. Shout for student entrepreneurs, particularly if your business, as you have more leverage, if your business if your business has grown over a period. That's why I said know your numbers, right? If your business has grown over a period, and I encourage, if you're not here before, I encourage everybody to watch Shark Tank. Somebody should please put it in chat box. SHARK Tank, TANK. Shark Tank Global on YouTube. It will help you a lot, right? So if you know your numbers, and one of the ways, majorly, there are two typical ways you can invest in in a business: equities and liabilities. Yes, I'll explain in simpler terms, which is equities, right, and liabilities, the amount somebody borrow you, the amount you buy loans. Let's say somebody, you pitch your business to someone. Hi, I'm Abigail Kazeem. I have a which business, for instance, event planning business. I want to start an event planning business or a gift packaging business, right? I sympathize well with gifts, I be with ceremonies, and I know how to package gifts for people. You develop usually formal and real formal business owners, business investors rather. They usually tell you to come with a business proposal. If the person is not your dad, your mom, your friend, they will say you should come with a business proposal because nobody wants to give you money and then just like that. You have to develop a detailed business proposal or a detailed business model, which usually would, not usually, all the time would include your financial model, the simple financial model of your business. How much you have made over, let's say, the past 3 years or 2 months or the past year. If you're just starting, or if you have not started at all, how much you project to make, your forecast, how much you are looking forward to make, the amount of cost that you are looking to make. And it's okay if you don't make any money, or if according to your forecast, you're not going to make any money in the first year of your business, right? So you can approach people for a loan, for an investment. If they cannot do a loan, they can invest in your business in as equities, which means the person will have a particular stake in your business, right? Let's say they are giving you the money, not as a loan. You might actually have a a family member or yourself or your friend or somebody dash you the money, like they are not expecting anything in return. That is very rare though, and you'll be blessed if you have that. But that aside, let's say you have that aside, somebody dashing you the money aside. But the two typical ways is somebody loaning you the money and then they are going to collect that money back. Let's say I'm loaning you 100 million and I'm saying I'm giving you this money for 3 years. I mean, I don't know if you want it to do business or you want to use it to pay anything, you want to go and use anything you want to do, you shall pay me back in next 3 years with, let me see, something very simple. I don't think listen, I don't think it's very tenable in this time and age that you say 10% interest. But let me just 10% interest. With the certain percentage of interest. Let's say you pay at 10% interest, but you give me back the money in 3 years. If you like use to do business, if you like the business, God forbid, it does not make profit or anything, you start giving me back my money in 3 years. That one is somebody's loaning you the money. Most times, even someone that is loaning you the money, they want to see your business proposal. What is the business into? What is the vision of the business? What is the mission? What are you doing? Who are your target audience? And all of those things. That's a particular part loan. Another part is, and the person is coming and say, I'm giving you $100 million for this your business. And this $100 million, though, you have to give me, yeah, for this $100 million, you'll be paying me 10 so dollars. That sounds ridiculous, but let's just use it as an example. $10,000 every year for 3 years, and at the end of year three, you not give me my 100 million back. No, you not give me 100 million back. No, that can't work. Be giving me $10,000 at the end of every month. Right. At the end of every month. That's the person investing in your business and trying to collect some form of return from your business every month, right? And that amount that that person is collecting, or most times usually be a percentage. You're giving me 5% of your profits or 5% of your sales every month, right? From this money, oh, then at the end of the year three or year five, can I pay me 50% of the money or something like that? That would typically be an investment, which is, that one, the amount the person is getting is based on your performance of your business. It's different from loan, right? Different from loan. That the person will not get part of your profit to just pay the person back their money and the interest. So these are two typical ways, really, of how you get um uh funding for your business. I'm seeing two more questions. So over to you, Marvelous.
Okay, thank you, Ma. Um, okay, he's also asking. Okay, he's asking if the proposal consists of business idea. Like, would the proposal consist of business idea? So when you're actually explaining his first question, you said something on having a proposal. Like investors, potential investors would love to,
Yeah.
you know, request for your proposal. So he's not asking if the proposal would consist the business idea. I said if yes, what is the place of idea being stolen, or is this not valid? I don't think I understand the question.
I think I get carried it to an
Okay.
extent. Let's say you try to pitch an idea to an investor. You can say yes or no if I'm saying your mind in the chat, right? Let's say you try to pitch an idea to an investor, um, see your business proposal, and then the next thing the person says, I'm not interested in your business, but then you see the person in 2 months, person has started that business. Has stolen your idea, right? Oh yes. It's possible. I've not seen it in action, but from the illustration it's feasible, right? Not us, but it's actually it can happen, right? However, that should not stop you. The fear of this it should not stop you from approaching investors from your business idea. If you have an idea, most times your proposal does not contain everything. It contains the core thing. What's the value, the problem, the value you're offering to your potential audience or your target audience, the what's it called, the value you're offering or the value you intend to offer, the problem you intend to solve, and how. Most times, the nitty gritty of how the idea will work, the technical work, are still in your brain. So if you are the business owner, right? I did an academy earlier in the year, EduBid Academy, the School of Finance, a global school of finance, and we prepare business ideas. With the business idea, I'm telling you, with the business idea that most of us presented, we presented it to judges. Even when they go ahead, the what we always have is the judges coming to say, I want to fund this idea. You have to champion it because it's in your brain. You're the owner of the idea. The technical know-how is with you. They can't read, and even if they do it, They might not succeed as much as you will. Okay. However, if the idea is stolen, hopefully you will get another one. But don't let the fear of that stop you from reaching out to people who can help growth of your business.
Okay. Okay. Thank you. Well, Kaide, I hope you understand now. One more question before responding to Miss Joy. I have one more question there, which I think Miss Abigail should kindly help us. So, okay, the question here is, what are some strategies for pricing my products or services to ensure profitability and competitiveness? Yeah. So, what are some like strategies for pricing my products to ensure that there's profit and competition again? So, I don't know if you understand the question now.
Okay, so the strategies to ensure that you have good number of customers, good volume, and also to stay competitive. Like your charge is not too expensive, and then your charge is not too expensive and it's not too cheap. So much that um people are undervaluing the services that you offer or the goods that you sell, right? I suppose that's the question, right? The context of the question. In that case, you want to say something? Okay. In that case,
I'm
right?
agreeing to that.
That's Oh, okay. In that case, that's a very valid point for every business owner to think about. I think sometime in last year, right? No, I think I was certain. I invited Akelamide to Blueprints to talk about this. Topic was actually pricing strategy because it's very key to every business owner. I do CV and I've had somebody say, and I'll say my charge. Let's say LinkedIn, for instance. It still happened 2 weeks ago. Abigail, I want to optimize my LinkedIn, and I tell you the charge, and you hear things like just for LinkedIn. You can go and do it yourself, right? Like I said, when you're just starting a business, particularly when you're just starting, you're trying to gather clients, try to have as much customers or as many clients as possible in your web, right? You will want to start with, you should, right? It's advisable. You want to start with a reasonable amount. Let's say, for instance, right, the industry rate. Like I say, you should be aware of how much is being charged in the industry. And this is also where the place of mentorship comes in. You should not start a business. I don't think you should start a business or even a career or anything at all in life that you don't have somebody that is guiding you, someone that is shining light in your path, someone that is teaching you or correcting you or reproving you, or somebody. You're not learning from anybody. You should not do that. That's not advisable, right? You make some mistakes that you should not have made at all, right? You should have someone that you're learning from. So if you have someone like that, you would know that this is the standard amount for people that are already established in the industry. This is the amount that they charge for this particular service, for the similar service that you also offer, right? However, for somebody that is just starting, you are very new in the industry, you want to ensure that what will make those people leave the person they already patronize to come and patronize you. Can use the the price effect. One of the things is the price effect, right? You can use the price effect, and you can also use the value effect, right? Let's say they're achieving let's use Glovo and Child Deck for instance, because I don't know the business this person is saying. For instance, if you have the kind of business, I would appreciate it so I can put it in proper context. But for now, let me use Glovo and Child Deck for better understanding. Let's say I can't remember the one that started first. Let's say, which one started first, Glovo or Child Deck? Can anybody remember? But let's say Glovo. I think Glovo started first. So let's say Glovo now. Glovo has started, and their service charge, their delivery fee for Glovo is an instance, right? Delivery for Glovo is probably 300 naira. right? Depending on distance, and they don't do long distance. If I'm in Jibo, Lagos, for instance, and I want something in VI, they will say is out of my coverage. It has to be something around Maryland, to say the most, or Obalende is even too far. It's somewhere around your coverage, and the fee is 300 naira. Let's say child deck now comes. These are instances, they're not real life. Let's say child deck now comes and say, I want to penetrate this market. How do we make customers or vendors, even people that want to buy food or things, patronize us, child deck, and over Glovo, right? What they will do in that instance, they're just coming to the market. Glovo is collecting 300 naira delivery fee, right, for within your area. Child deck could say, we'll give you 250, or we'll give you 250, will charge you 250. And you can also increase your axis by two 2 kilometer or something miles away, right? Maybe Glovo, you cannot order beyond maybe Maryland. For someone that is in Jibu, so they can say will also give you up to Ikeja, right? So if what you want to buy, what you are craving is in Ikeja, you can still buy it and you still pay 250. That's another way, right? So you can, as a matter of fact, child can even still keep it at 300, but offer that additional value. So one of the ways you can penetrate into the market, right, if you are new and stay competitive, is either by price reduction or by value addition, right? So you can do, is it that you do both or you do either of them, right? Value addition usually works more than price addition, especially for customers that are not price sensitive. Like if it's 300 naira, somebody like me, if it's 300 naira, you can get it to me in 10 minutes is too much. If I'm hungry and I order something from you, I can get it to me in 2 minutes. I'll pay that 300 naira than for me to go and pay 250 global. Like I would usually like to want to go for quality rather than quantity, right? So some customers are like that. They are price insensitive. So you might not, your price change might not really move them, but added value would move anybody, whether the person is average income earner or low income earner. So typically always focus on added value that will not also cost or strain your business so much. So you have to consider the cost to your business and not. So that's what I'm saying. If you're in Lagos, or you know Lagos, from Maryland to Lagos to Ikeja, sorry, it's not so far. Or maybe let's say from Maryland to, let's say, Okwebi or Jota, like that. You just something that will not strain your business. Also to know that when you're just starting a business, especially when it comes to goods or a business that you have a lot of costs, you might not make so much money. As a matter of fact, you might not make any money at the first 2 months, 3 months, 1 year of the business. When I'm paying financial model, 5 year financial model, usually in the first 2 months of a new business, 2 years, sorry, you are not making any profits. Or the first 1 year, you are not making any money. You are either breaking even or maybe making a loss if it's the capital intensive business. So you have to put that into consideration. But as you go, if you're an existing business, as you go along in the journey, so as child that begins to gain ground, this is an hypothetical example, for instance, is a scenario. So as child that begins to gain ground now, they can now remove the 250 slash. Say you pay us 300, we'll still give you the added value. We'll give you your order. If you order from Ikeja, it's no problem. We'll still deliver it to you, right? And they can also say for your first two orders, it will be free or all those things, right? Just added value always works. And also know the value that is the amount already charged, the industry standard charge. Know the industry standard charge so that as you grow in your skills, you know that you can offer what the best person in this industry is offering. It's just that you don't have the connection the person has. You can increase your price small, or give your customers, what's it called, or your clients heads up. If you want to increase your price tomorrow now, or you want to start your price increase from September, the laundry service I use, they were doing a promo. They just started. They were doing 30 pieces of clothes, 5K, wash and iron. That's ridiculous, right? Yeah, super affordable. But they did it for 2 months, or is it 3 months? On top, they sent an email that it's an estimate that has been increased to 10,000 naira. 30 pieces, so still 30 pieces, 10,000 naira. There's still free delivery and free pickup, but it's 10K, right? You that you have patronized them, you see how efficient and effective they are. They give you back your 30 pieces, folded, ironed, properly dry cleaned within the agreed number of days. You might want to continue with them if you don't mind with the price, right? They've established their presence, they've put themselves on our faces. I've recommended them to three people already. Four, as a matter of fact. Okay, three, right? So those other three people might not mind. They might still continue even with the 10K. So I'm just saying that explore value addition and explore. And I know the amount that other dry cleaning services are charging. That 10K safe is still cheap to an extent because it's free delivery and free pickup. So always increase your, so they gave us, yeah, what I was trying to bring out in this laundry scenario is they gave us a timeline. They sent a text message, even if doing short, they sent text message on Thursday that the price hike will start on the night, that's on Monday, right? So my roommate wanted to give them a clothes. I said give them now, you still pay your 5K, but if you give them on Monday we pay 10K. So like that, give your customers some spaces. It's also make them know that this amount, this thing this girl is doing is true. It's actually worth this higher amount, and she's giving us time for or notice for the price period, for the price change. I hope that helps. It should help actually.
Yes, ma. Yes. Okay. The last question for today. It says from Miss Joy. He says, how can I manage my business expenses and personal expenses separately to ensure a clear financial picture?
Thank you, Joy, for that question. I think I butchered that actually. No, I think I did at the beginning of the session, right? By say, let me go to the next slide. I think it's the next. Yeah. Having a clearer, no, a separate account. The first step, right, to be having a separate account for your business. Don't do if you're, you know, I don't think I know any Nigerian that has one account number, right? So if you want to keep one of your personal account numbers as your business account, ensure that no other personal expenses or income goes into that account, right? Or if you want to create, open a separate money point account or Opay or Pampay or any of those simple banks. Many people don't believe in them, right? But if you want to, you can just go ahead and ensure that that account, that particular bank is solely for your business. The money that goes in and comes out for your business, you don't borrow any money from it. And if by mistake, is um if things become not us, if you just need to, there's any need for you to take money out of that business account, you document it, you put it there as loan. I don't see any reason why you should loan money from your business. What if you don't have the business? Wait for when at the end of the month or whenever it is that you are paying yourself from the business, and use that one. In on no occasion for discipline sake should you take money out of your business. Have a separate account for your business, and also explore these apps that I have on the screen. Right, money manager app. This money manager app, the image on my slides, actually money manager app. So it's available on iOS and on available on Apple and also Google Play Store. So ensure that you can explore Money Manager. I've used Money Manager, I use Money Manager, and I know that it's great. Sparkle also has something. Sparkle can also generate invoice for you and all of those things. Flex will help you to flex, particularly for business owners. To help you to budget, help you to, but flex for people who have more structures and you have people that you're working with, and you want to pay your transport, and you want to pay your delivery person, you want to pay your, but for simple business, you can use Money Manager, right? Or use spreadsheets. Just make it simple. Use spreadsheets, Excel, Google Sheets, WPS, which are available on your mobile too, right? Or you can use paper. Write it in your notepad every day. The amount you spend in your business, differentiate it. If you're into a thrift business or any um goods, you're selling goods, right? It's much more easier for you, because let's say you pay for transport, you go and pick up the goods or you go and pick up your raw materials, that's your part of your cost of production. Transportation, write it down, right? Even if your customer has not paid you, write it down. It's also, documenting or tracking your income and expenses will also help you to know whether your business is actually making profits. Because if you think you're making money until you go through your book, your expense and income sheet, and you see that the money that went out is more than the money that came in, right? And you now see the need to actually increase the price that you offer your customers. That's how people increase their price. You see that you're selling food, the amount you bought pepper yesterday, not the same amount you're buying. You bought pepper you are buying pepper today that you went to the market, you increase the cost of of the food that you sell, or you reduce the amount of spoon that you sell for 500 or something like that. So you have to that's those are ways really that you can properly manage your business, or separate or find a clear picture, right? And draw a fine line between your personal finance or personal expense, and your personal business. Don't spend your personal. You know, the funny thing as a business owner is you would have, there's it's possible, and it will definitely happen that you use your personal money for your business, but never should you use your business money for your personal self. Okay, that sounds selfish to yourself, like maybe you're hurting yourself, but it's for the growth of your business, right? As I said at the later part of my of this class, right, that think have the long-term approach. You might not even be able to pay yourself now. You might be putting a lot of money into, you might have to put a lot of money into your business now, but don't take out anyhow. Before you take out money from your business, think about it. Ensure that you can afford it 5 times. The general rule is to ensure before you buy anything personal for yourself from your personal money, ensure that you can afford it 3 times. If I want to buy a shoe that costs 15K, I'll know that I can afford that shoe. If I can, if what if that shoe, I would say, what if that shoe was worth 15 times 3, but 5,000? Would I still be able to afford it? If the answer is yes, then I can afford the 15K shoe. If the answer is no, then I can't afford it right now. The same thing should apply to your business. I increase it to 5 because it's business. Okay, let me be fair and still leave it at 3. If you cannot afford an expenses, like you cannot pay afford, if let's take paying yourself for instance, you have to pay yourself as a business owner, and your business cannot afford 3 times that amount, then you should not put the money back into your business. Let it grow. Okay, at the long run, you'll be better for it. Thank you very much.